don't have any cash flow coming in, you're going to have a very hard time making decisions in the heat of the mayhem of markets. Money in the bank being a melting ice cube. All smart people who go into business, that 99% of businesses fail. Look from 2019 to now, see what the difference in price is. Warren Buffett is worried about... Welcome back to episode 4 of Money, Markets and Mayhem. And boy, have I got a ripper for you today. But first of all, I just want to say thank you to all the subscribers and to all the listeners who have listened in so far. The last episode that I released on my macro origin story, basically why I left real estate to go and do macro full time, has got over 2,000 views. I am absolutely stoked and blown away that on such a small subscriber base, we've been able to generate that many views. It's wild. It gives me so much energy to want to come in here and just create more videos. I feel like creating a video each and every day at the moment. If only I had the time. I'm quite snowed under with my e-commerce business. We're trying to do some really exciting things and take that business off of Amazon. I had a couple of people in the comments mention recently or ask recently if I was going to talk about e-commerce, and I probably will at some stage when it's relevant, because having a business that produces cash flow is one of the most powerful things to being a successful investor. It gives you strength as an investor when you've got cash coming through and you're not betting with the farm or with all the cash that you have to your name. And there's also been a lot of people who have said, I've got 500 grand or I've got 200 grand in cash. I'm trying to exit my 9 to 5 in order to trade. What do you recommend I do? And, that can get tricky if you don't have cash flow coming in, because when you're playing with money that's coming, or when you have cash flow to support your lifestyle, you're playing with a set piece of capital, treating it like a business, and you're going to go out and invest and trade with it. It's a different place when you're playing with your life savings versus you're treating like a business, like a startup, because all smart people who go into business with the likelihood, with the knowledge that 99% of businesses fail, right? Whereas if you're playing with your entire nest egg, it is unlikely that you are going in there with 99% thought process that it's going to fail. You don't want to lose that no matter what. So this game of macro investing can be a very different proposition depending on where that capital that you're using to invest is coming from. If it's your last or your only 200,000, you're only 500,000, you don't have any cash flow coming in, you're going to have a very hard time making decisions in the heat of the mayhem of markets, if that's your fallback plan. Whereas if you're using capital that is being set aside for a venture, or you have cash flow coming in to support your lifestyle, then your mind is going to be so much clearer when making investment decisions. That is one of the most common things that I find, is that piece. Where is the money coming from? Are you betting the farm, or are you betting with money that you can't afford to lose? Or is it money that has been set aside for this venture and it doesn't necessarily matter if you fail? It's not going to mean you miss your mortgage repayments and things like that. Or do you have cash flow coming in from other ventures that you can afford to put into investing as you would to grow your business or to buy a new stock, right? What is today's episode going to be about? Well, most of you, if you follow me on Instagram, or if you've heard any of the previous 3 pods, or if you listen to this podcast in the future, are going to hear me talk about currency debasement, Fed and government money printing, and inflation. I'm going to talk about those concepts a lot because I think that's probably one of the biggest challenges that faces the working person in our lifetimes, and especially people who don't currently have assets behind them and who are solely relying on their 9 to 5 to live. It's going to affect you even more. And the sad reality is it's those latter people that I just mentioned that don't really have an understanding about these things. So what are we talking about today? Well, we're going to be talking about Uncle Warren Buffett. And many, for some, it's not even a point of argument. Many would consider Warren Buffett the greatest, or if not one of the greatest investors to ever do it. And for a long time, Warren Buffett has had some pretty fixed beliefs Some of his beliefs have never bet against America. He's never really been a fan of gold because it doesn't produce an income like his assets do that he likes to invest in. And most of you, if you're following the crypto space or Bitcoin, have probably heard his comments about Bitcoin. Him and his ex-partner Charlie Munger have called it rat poison squared. Well, today I'm going to show you a recent video from Warren's investor call. And in this video, amongst many other things, Warren announced his retirement at age 93. So he'll be stepping down as the CEO of Berkshire Hathaway. And he spoke about the US dollar in ways that I haven't heard Uncle Warren speak about the US dollar before. And a lot of Bitcoiners and gold people have caught on to this clip and found it rather telling and fascinating. So before I talk about the clip anymore, why don't we show the clip and then I'll discuss it a little bit further.
Owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency. I mean, the tendency of a government to want to debase its currency over time there's no system that beats that. You can pick dictators, you can pick representatives, you can do anything. But the people, there will be a push toward weaker currencies. And of course, that is, I mentioned very briefly in the annual report that the fiscal policy is what scares me in the United States because it's made the way it is. And all the motivations are doing a lot of things.
And this, again, was only a couple of days ago on the weekend at Warren Buffett's Berkshire Hathaway investor call. And Robert Breedlove reposted it, and he has a podcast called What is Money? And I've heard a couple of explanations of what people think money is. And I think you'd be a little bit surprised if you dig into this concept and to these podcasts a little bit deeper. But Robert Breedlove makes the point that it might be regarded as the defining question of our time in history. And I think he's right. And I think he's right based on the relevance and the significance that what is happening to our fiat currencies at the moment is going to have on our lives and our standard of living moving forward. Anyway, let's watch this clip.
That can cause trouble with money, but that's not limited to the United States. It's all over the world, and some places it gets out of control regularly. As I know, they devalue at rates that are breathtaking, and that's continued. I mean, and people can study economics, and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money, and you will, or you can engage in clipping currencies like they used to do centuries ago. Or then there will always be people, and it's the nature of their job. I'm not singling them out as particularly evil or anything like that, but the natural course of government is to make the currency worth less over time, and that's got important consequences. And it's very hard to build checks and balances into the system to keep that from happening.
Wow. I don't know about you guys, but I haven't heard Warren Buffett speak about the US dollar and currencies, government money printing and debasement in those terms forever. Sure, he has at some stage, but it hasn't been in the recent period, that's for sure. Now, why is that so significant at this point in time, you might be asking? Okay, Mark, Bitcoiners say it, gold bugs say it. You've been saying it. We know currency debasement is significant, but why is it significant coming from Uncle Warren? Well, have a look at this. Recently, Berkshire Hathaway, and I'll pop up on the screen inside in a subtitle or in a text format what the actual value of Berkshire Hathaway is, but I think it's over $1 trillion, the equity value of Berkshire Hathaway. Of that $1 trillion, they have $347 billion in cash. Now, that cash isn't just sitting in a bank account. It isn't sitting under the mattress. That cash is sitting in what's called a treasury bill. A treasury bill is a short-term loan to the government in order for the government to fund its operations. So basically what Warren Buffett and a lot of these big companies in the US do is they have their cash, they lend it to the government in order to get a return of 4 or 5%. That's what it is at the moment. And the government goes and funds their operations with that cash pile. Why is it significant now? Well, Berkshire Hathaway and Warren Buffett over the last 6 to 12 months have been selling a lot of equity to raise that cash pile. It's the biggest that's ever been. But why else is it relevant? Well, Warren Buffett actually owns roughly 5% of all the treasury bills. So all the short-term paper that has been issued by the US government, Warren Buffett owns 5% of that. So he's basically lending the government 5% of the money that they are lending from private citizens. That is wild. Now, why is that significant? Well, Warren in his latest annual letter has basically said that his biggest fear at the moment is the debasement of currency. Why is that his biggest fear? Well, because if the US government continues to put more money into circulation, and if they continue to print money and they continue to devalue the US dollar, continues to lose purchasing power versus hard assets, versus other countries, then effectively that $347 billion that Warren has in cash, if they're debasing that at more, or if inflation is more than the 5% ticket he's getting to lend them that, then he's actually losing money. You may have heard Michael Saylor talk about money in the bank being a melting ice cube. Well, all of a sudden, Warren Buffett is worried about that melting ice cube. Let's have a look at another video from Warren only 3 years ago at his annual shareholder meeting. This was when Charlie Munger was still alive. And let's have a look what he had to say only 3 years back.
All of the Bitcoin in the world, and you offered it to me for $25. I wouldn't take it because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have to save people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin? I mean, why don't you call it Buffett coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. I mean, it's other people have entered the room and they move money around, but there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. You forget the numbers and get the equation. You can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible. I mean, you can say a great painting, probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name at some point, there will be a few things. I mean, you can find something for that. If somebody wants to sell you a pyramid or something, and you can charge the viewers, it'll be around a long time and won't produce anything. But people will find it interesting to go there because they've read about the pyramids. But basically, assets to have value, they have to deliver something to somebody, and there's only one currency that's acceptable in the United States. I mean, you can come up with all kinds of things. We can put up Berkshire coins, or we can put up.
He's about to start referring to the US dollar. And just remember, in the video I showed you prior, he said that his number one concern is the devaluation of the US currency and all currencies around the world. So let's hear him continue.
We get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer. There's just under 2.3 trillion just of these little pieces of paper floating around. Some places 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change the way they let Berkshire money replace theirs, it's out of their mind. I mean, so anyway, with those few deficiencies, you can, whether it goes up or down in the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it. And people have attached magics to lots of things. I mean, the gold in Wall Street, create magic. We are not an insurance company, we're a tech company. Well, they're an insurance company, but a dozen people.
All right, let's cut it there. But Uncle Warren, he seems to have changed his tune, and there seems to be, for the first time in a long time, some concern about currency. Now, he did say one thing in that last video that I thought was interesting. He says, "This is money," and he holds up the US dollar bill. Well, I think I mentioned it on my last episode, but the founder of JP Morgan, the biggest bank in America, is famously quoted for once saying, "Gold is money and everything else is credit. Everything else is an IOU." So what's happening right now? Well, in simple terms, all of the debt that the US government has taken out, all of the debt that these global governments and central banks are taking out and are going to continue to take out, because that's the only way to offset this declining productivity from declining population rates. The only way to replace that productivity is with debt. There's two other ways that we can do it. You can have austerity, where the government stops spending money, and in that case, we would likely all go into a global recession, or you can become more productive through a productivity miracle. And I think that's what everyone is hoping for with relation to AI. Because all of a sudden, if you can replace the declining population and the declining work rates with robots, then you might be able to re-stimulate that productivity. You might be able to have massive productivity gains, and you can grow your way out of the debt. But if that AI productivity boom doesn't come for the next 5 or 10 years, then the only solution is it's like there's a meme out there that Otto from The Simpsons, there's a scene where he says, "Don't make me tap the sign. Don't make me tap the sign." And Lynn posts that meme, and hopefully we can throw it up. And she says, with relation to the government money printing, nothing stops this train. Don't make me tap that sign, nothing. And that's the reason when they say nothing stops this train, because like we said, there's only 3 options. There's austerity. So everybody tightens their belt, and that is going to decrease the standard of living, and it's going to cause major deflation and potentially a depression. Or you have a productivity miracle, and that could come with AI. You need higher birth rates. We're not going to get that. So the only option is going to be AI and robots. Or you print your way out of it. The government puts more money into circulation, creates more debt, creates inflation, creates currency debasement in order to buy time and inflate away that debt. Again, another concept that is hard to grasp at first, but if you throw this concept that I've been talking about into ChatGPT and ask it to explain like you're 5 years old or like you've just started learning about macro, it'll do a heaps better job at giving you the written version so that you can look into it a little bit further. Crazy times. What does that mean for the average person watching this video? And that's probably why you guys are tuning in each and every week, to find out how you can deal with the flow of money, the crazy markets, and the wild mayhem that's going on. You want to know, how can you be best placed to still be better off for you and your family in and amongst those things, that train that you cannot stop? So how do we do that? First, I want to tell you a story about a friend of mine who has basically been trying to get his family to invest the profits of their business into assets rather than keeping it in the bank. Italian family, European, cash is king. Let's keep the money in the bank, save it for a rainy day, etc. But while this is happening, the price of everything is skyrocketing. And one little test I said you should give your dad is go and ask him to go out and buy all the things that he buys on a regular basis. So go have a look at the price of a used car or a car. Go have a look at the price of cigarettes if he smokes. Go have a look at the price of alcohol. Go have a look at the price of groceries, beef. Go have a look at the price of the house you live in. And you can do this even if you don't own a house. Go have a look at the price of the house that you are renting. And go back and look from 2019 to now and see what the difference of all those items that you consume on a daily basis, see what the difference in price is. I think you'll be hard pressed not to find one of those that hasn't doubled between 2019 and 2025. Why has that happened? Well, the short answer is the amount of money printing and stimulus that governments and central banks have put into the system to prop up the system based on this dynamic that we've got unfolding at the moment. So if I haven't taken you with me on the journey about why that's important, go out and do that little exercise for the things that you most consume in your life or that you most want to consume, the things that are important, like a house, if that's important to you, etc. Go and look at, if you don't travel overseas and you don't want to look at hotel rates in Europe or in America, have a look at your hotel rates on the Gold Coast. Have a look at them now and try and get the data from 2019 and then come back to me and comment what you found. So if I have convinced you that this is a problem that requires our attention, that if we don't want because money is just time and energy stored in an abstract form, right? Jack Mallers often talks about that. Money is your time and energy stored in an abstract form. So if you've got a lot of money, then you've used and stored the rewards for your time and energy very well. If you don't, then you haven't got a good return on the time and energy invested, because everyone out there is doing their best. Nurses, doctors, ambulances, teachers, even white collar retail clerks, etc., are all out there expending energy, right? Most of us within a range are all trying just as hard as others. There's a small percentage that try that little bit harder, that go that 1% further, and they generally get the lion's share of the results, but we're all out there giving it a go, right? We are all out there giving it a go. So why are some getting a better return on their time and energy? It's because they're choosing to store the rewards from their work, money, into a more effective place. Now, what are those options? Where can you store your money other than the bank and the mattress and get a return or survive this currency debasement and money printing, this rising cost of living that I'm telling you that I think is going to occur? Well, let's look at our options. You've got property, residential property. You've got commercial property. You've got gold. You've got stocks. You've got Bitcoin. You've got commodities. You've got your own business. That's to name a few. This podcast, we've been going quite a while so far, and this podcast is not going to be about going into detail on which of those is the best. Maybe in a future podcast or the next podcast, I'll go through each of those asset classes that I think is most investable over the next 5-10 years, and we can look deeply at the pros and cons of each. But for this podcast, I just want to quickly touch on a few things. In Australia, property is one of our favorite pastimes. Property is one of those things that people say you can always invest in property because it will always go up. I've done a bit of research into this, and I'm going to continue to do research into this, and maybe we can talk about it in future episodes as well. But I have this feeling, it's more than a feeling, it's an educated guess based on the research that I'm doing. Because interest rates have been coming down for the last 40 years from 1981, I feel like we're going into an environment where interest rates may start to rise over the next 5 to 10 years. There's a possibility they could be up at around 10%. If that happens, what I think could happen to property is, on nominal basis, it will go up. I don't think you're going to see property prices come down, especially in Australia, because the government and the economy relies so heavily on property that if we had property prices come down too dramatically, that we could have a deflationary bust or a crash. So I think that property will go up in nominal terms, and it'll have its peaks and troughs. But what I think is a real possibility is that on a real basis, adjusted for inflation and debasement, if you look at property versus things like gold, potentially Bitcoin, hard productive assets, that you might see that property actually is outperformed by those other assets over the next 5 to 10 years. So yes, you will make money, and yes, it's better than having your money stay in a bank, but it may not be the fastest horse like it has been over the last 5 to 10 years. What's the point here? Well, the point is, and the reason why I think you should continue to tune into Money, Markets and Mayhem is because the world is going through a financial and monetary regime shift. And you're seeing a lot on the news at the moment about tariffs and rebalancing of trade, etc. I think a lot of that is missing the forest for the trees. I think most of what's happening at the moment is more about a rebalancing of capital accounts, right? That's the deficits and surpluses of nations who trade with one another. It's about the flow of capital in and out of countries. And it's about the capital wars that I think have been occurring since 2008, when the world realized what kind of shape that the credit markets were actually in, and the amount of money printing that was going to be required to get us through this period. So what is the final point to all of this? What is the thing that I think we need to be focusing on most? I think we're moving into an environment where the buy and hold of the S&P 500 or the passive investing model, while it might not go down, property, stocks, etc., it might not come down, it might go up on a nominal basis. I think on a real basis, it is going to be outperformed by things like gold, which has a 2,000-year track record. And just for the record, I'm not invested in gold. I'm not telling you to go out and invest in gold. I'm just saying that a lot of the story behind why gold bugs are gold bugs is starting to come to fruition. And there's a case to be made that Bitcoin is also going to benefit from this regime that we're moving into. So understanding things like hard money, going back and reading the book Broken Money that I spoke about, going back and looking at the podcast What is Money and having a look at some of those episodes, looking at the Austrian School of Economics and hard money, I think it's going to be important. I think gone are the days where we can invest in non-productive assets or tech companies that don't have revenue stream. Like you saw in from 2008 to 2021, ARK Invest, which invests in a bunch of equities that really don't have a lot of profit, but are out there building. That isn't going as well this time around, this cycle. Since 2022, that hasn't been outperforming like it did in those previous cycles. And that's because I think the world is shifting to productive assets, industrial assets, commodities, things that have a hard value, a hard money value. You know, if you go to some Eastern European countries back in the inflation times of World War, when that inflation was happening, people, old ladies and old men would go out and buy bikes. There's stories of people that would go out and buy 16 bikes because later they knew that even though their currency was depreciating, that they would be able to trade those bikes for other things. They'd be able to trade those bikes for goods, right? So this is the world and this is the environment that we're moving into. Bitcoiners have been talking about this for a hell of a long time. Again, I'm not telling you to go out and buy Bitcoin, but I'm saying that a lot of these things are starting to link up. They're starting to tie together. And a lot of the things that people have been saying that have been dismissed as crazy Bitcoin speak are now being said by the world's best investor, the best to ever do it. Warren Buffett is now starting to share exactly the same concerns that have led to these ahead of the curve investors, so to speak, investing in things like Bitcoin. Yeah, another thing that I think is really worthwhile, and it's something that I'm super interested in, is investing in tech companies that are going to have the ability to change the world through their productive technology as we move into an AI-driven world. And that's not necessarily investing in open AI and things like that, because I largely believe that those models will become commoditized. It's the people that are going to be able to manufacture goods with those new artificial intelligence systems or physical artificially created robots. You know, who in the future is going to be able to create productivity, right? So if you're looking at this from a purely investing point of view, these are the areas that I'd be looking into: broken money, the devaluation of money, currency debasement, debt, the Austrian School of Economics, hard money, gold, Bitcoin, productive assets, industrial assets, materials. I'll also be looking into tech and tech that is going to have the ability to change the world by increasing productivity. You know, software companies like Microsoft pretty much have a monopoly. They got high margins and they increase productivity, right? So of all the Mag 7, that's probably one of the ones with the biggest moat, right? These are the things that I think we should be looking into, and I think you guys should be researching, because people often ask, where should I start? Well, these are some of the clues. Again, never financial advice. I just hope to leave some clues based on the things that I've been able to accumulate, the knowledge I've been able to accumulate over the last 5 years as I become more and more obsessed with this industry and the flow of funds and capital and everything to do with that. The other alternative is that you use the money that you currently have, or the money that you're earning from your 9 to 5, to pour back into yourself to make yourself a more productive asset. Right? If you're a young person starting out, I would be investing all of the cash that I had, 90% of the cash that I had, I would be investing back in myself, whether it be through traveling and getting a view of what's happening other places in the world to broaden your horizon, whether it's buying courses, whether it's buying education. I'd be putting that money, the younger you are, the more money that I would be putting back into yourself to build your knowledge, to your own knowledge, so that you can become a productive asset, so that you can go out and capitalize from these opportunities that you're learning about. It's definitely never too late to switch course, to switch gears, and to go out there and start to acquire knowledge. There's never ever been a time in history where it's been this easy to self-teach and to get your knowledge up to a level where you know more than the majority of the population, and you can use that knowledge to your advantage than it has been now, through the use of AI and all the tools that are now making that process so much faster than what it used to be. I'm basically self-teaching myself options for a couple of reasons. A, because I think I can do it quicker and more effectively on my own, and B, because I actually don't want to be clouded by other people's strategies, all those shiny objects, all that glitters is not always gold. I want to basically learn this in a way that complements my style of investing and the way and the curiosities and the things that I'm interested in, so that I can build a system that is right for me. The problem when you're trading other people's systems or other people's strategies is the minute that they start going against you, you lose conviction really quick. But if you're trading your own curiosities, your own convictions, then over the long term, I think that's a heaps better way to make money, to survive in this game, and to be really, really successful. Anyway, this has been a long one. I'm going to leave it there. I hope you found this one enjoyable. The way that I know I'm doing a good job is if you like, share, subscribe, send it to your friends. That's how I know I'm doing a great job. So that's all for now, and I'll catch you on the next one.